advisors, Steve Carl and Mike Cicero. So would you like to go over the changes that we've made and the progress that we've seen since we brought you on board? What was it, a year ago?
Not even.
Not even.
We
Yeah.
started in the fall of last year.
Was it really?
Yeah.
Yeah.
It's been a short period. Can we sit up here? Is this okay?
Yeah.
So
We have more electronic copies.
Sorry, we should have made more copies. We didn't.
Yeah.
Or I can share mine.
Okay. What, do you have yours? You have one?
Yeah.
So I'll just start real quick. So I'm Steve Carl. I'm the CEO of High Probability Advisors. So do you have something about me? You want to go up here? Okay. And so thanks again for having us in. We appreciate it. We're very excited to continue to go to work for you. Mike's sister and I, Mike is the director of research, so I thought I'd let Mike, well, we're both available. We wanted to be at the meeting and have Mike maybe take you through to more granular detail of what we've done so far, and really keeping, the big thing is obviously we have to keep within that, you have a very limited structure which a narrow band that we can invest in, so we want to make sure we're keeping compliance and making sure we've stayed within that, which Mike will show you, and then hopefully make money for you too, which is a goal met as well. So I'll let Mike get into granular, but before we do that, one other thing, I want to make sure from our vantage point, are we meeting your requirements as far as we try to make sure we're here for meetings if you need, if there's whatever regularity of meetings would be helpful, because I know sometimes it doesn't, you don't need us to speak, but if it wants quarterly or monthly or whatever you want.
Probably a good idea.
Yeah, okay.
Yeah.
So the rest of the board members can ask questions.
Yep.
How's it going? Maybe quarterly?
Quarterly.
Yeah.
So we will certainly do that wherever you need. Okay, thank you, and I'll let Mike take over.
All right. Well, thank you, everyone. To hit, I guess, the first point, we are solidly within the investment policy statement. So, we're utilizing treasuries within, a 2-year term, which are the two big stated objectives in that policy statement. So there is no concern there. We did see that it gets amended. It looks like every March. So I assume another amendment will come, but I have really no possibility that we would fall outside of that no matter what changes are made. The portfolio as of today is at 17.4 million. You can see that on page 2. And then page 3 has the performance, which year to date is at just shy of 1%. So if you think of that on basically a quarterly basis, run rate will be just over 4 percentage points.
I'm sorry, what page are we on?
So page 3.
Yeah.
So at the top is the actual performance. It is tracking exactly as we would expect. The portfolio, currently, and we can flip to the next page, gives the page 5 shows you the portfolio, which is made up of 9 U.S. Treasury bonds, so the highest quality bonds, again, within the investment policy statement. These are laddered, meaning that we bought maturities all the way out to 2 years. So you get a benefit from doing that, of having short-term treasuries which are maturing. They're providing you with liquidity, and decision points, whether to utilize the cash or to reinvest it. On the longer end, you're really locking in the current rates. So, let's say the 2-year treasury bond, locking in at, 4+%. So if, the economy was to correct, and if the Fed was to drop rates, you are locking in those higher rates, which is basically protecting against reinvestment risk within the portfolio. As we've structured this portfolio, it is tilted slightly towards more recent bonds, more recent maturing bonds, and the reason for that is to try to capture a slightly higher yield. We still, in the market has changed wildly over the past, year and a half, but most recently you are still getting paid more for the nearest term bonds. So a 3-month bond that's maturing in 3 months is paying higher than a bond that's maturing in 2 years.
What's the average?
So the average across this entire portfolio is 4.21% is the
If you
yield.
look at the most recent 90 days.
Most recent 90 days, So if you look at the shortest term, it's paying about 4.35%.
Okay, that's all very good.
Right, yeah. So we're really happy with that, and one of the most important things is these are real yields. So you're outpacing inflation, which is the real goal over the long term. We will have 2 maturities coming in the next 2 months, so it's something to think about for cash utility. We have 2.4 million maturing in April and another 2.4 million maturing in May. So if cash is needed, it's available. If not, that first maturity,
Just rolls right over to another.
yeah, it'll roll over to the furthest out, and then the second maturity, because we want to make sure we're staying within that 2-year term, we will feather throughout the ladder. So we may buy 6-month bond, 9-month bond, 12-month bond, to try to even out the maturity amount so that it's a little bit more even over time.
Break it up
than it's
into
grown.
smaller pieces.
Could I ask a question?
Yes,
So
absolutely.
Allison, do you stay in touch if we need cash?
Oh, yeah, I don't know if we. That's not a problem. Yeah.
So
She
so
doesn't have
before
enough cash in the
maturity
bank for her
happens, there's a
business, we're in
discussion?
trouble.
Okay,
And we try to check in to make sure.
nothing different.
So if something happens, we're checking in to make sure even before, just to have a last say, we're all good.
Yeah.
Makes sense.
So we have our own speed now.
Yeah.
And the communication has
No, I
been
think it's the-
excellent.
I think it's the other way around.
It's a red phone, goes right through. Yeah,
That's trouble if she comes out.
Exactly.
I have a question. Are you if I can ask a question? Are you automatically going to the next farthest out?
That's
Or
Yes.
are you looking at the different, because I know that the farther out ones were lower rates than shorter terms, just based on those emails we get from M&T?
Right, and we are looking, so that's part of the value that we're adding, is we're looking at the entire ladder, trying to figure out where to tilt,
Yeah.
heavier weight, obviously, the higher yielding, but at the same time, we want to be very conscious of the fact that those furthest out terms are very important. Again, if the market was to collapse and the Fed, drastically decreases rates, we want to be locking in those current rates at 4%, which if the Fed was to reduce
But
drastically.
if a short-term rate was higher, would you?
So we are tilting towards the shorter term for exactly that reason right now.
Because it is higher.
But you're still trying to keep the balance of, like
Right.
you're saying, taking advantage of those, but still getting you some longer
Yeah.
term, so you've locked in something.
Exactly. So we are constantly looking at that, and that is, that's all the analysis that's going around, 2 weeks leading up to those maturities is identifying, the optimal points to invest to increase
And
that.
you're laddered all the way through to 2026.
We're laddered right to the end of 2026. So this next bond, if not used, we'll purchase, something towards the end of first quarter of 2027. And then that second bond in May that's coming, it's right on the heels, we'll look to feather that out across the ladder.
And you typically don't have more than 3 months between one that's ready to cash and ready to.
Correct. On average, it's maturing every quarter. And you'll see in the, if you were to actually look at the timeline, there may be, and it's again, buying the best yield that you possibly can. So it may be a month or 2 off of that, but it is very liquid,
Okay.
every 3 months or something maturing.
So bonds are in a pretty good position at this point
They're-
relative to some of the
They're a great
other
position.
stuff going on in the investment community.
There's a lot of volatility
A
happening,
ton of
exactly.
them, right, so.
It is.
Every day we're
really-
learning something new.
Yeah, so this is really a good investment from
Yeah.
that perspective.
And when you look at those prudence standards in the
Right.
investment policy statement, it's meeting that 100%. And the beautiful piece here is, these bonds especially, the US Treasury bonds, if there is fear, if there's a catastrophe of some sort in the market, people rush to
bonds.
safety. And this is the
Yeah.
place they land, which increases the value of that, and that gives us another decision point. So if that was to happen, and you generate a premium on some of these bonds, you can look at potentially harvesting that premium and reinvesting, somewhere else out on the ladder. So, we have a eagle-eye view on that, and if something should happen in the economy.
Markets are certainly interesting at this time.
They have been extraordinarily interesting.
Understatement.
And, right.
Yeah.
And it's great, even on the bond side of the investing world, there are corporate bonds that are being heavily impacted
Yeah.
by some of these changes.
That's
So
true, too.
to be in the government's fully backed by the US,
Right.
and providing liquidity, that's the beautiful thing here.
And the nice thing is, a couple of years ago, the yields were not nearly what you were getting now. So the nice thing is you're
Yes.
finally getting some, you're getting paid.
Take
you're getting paid
advantage
for
of that,
Yeah,
right.
exactly.
and outpacing inflation in the process.
All a miracle. Okay, well, that
Was that helpful? Was that level?
I think
Okay,
so.
great.
Any questions, Lisa?
I have a couple of questions not related to this, just your perspective on what you're seeing since February 17th and now, and just your own thoughts. I have my own, but.
So it's been a tale of, two halves of this quarter, for sure. Since, we look at, basically, Valentine's Day is the point that we think it really turned. The catalyst being, all the tariff related messaging, as well as this concept that, it's not just a bark, there's some aspect of bite. And
That was the biggest change, right? Because people assumed he wasn't,
Right.
it was gonna be a threat, and all of a sudden that's changed.
if there's one thing that the markets absolutely hate, it's uncertainty. And then it's uncertainty, you can see it in the volatility that has occurred over the last, 2 weeks or so. There seems to be, some interesting broad changes within, the markets, one of which is, for the last 2 years, you've had what are called the Mag 7 stocks, which are these, mega cap tech stocks. They've driven almost all the return in the market. All of a sudden, it really started at the beginning of the quarter, but escalated from February 14th onward. You see those stocks are dropping, drastically, and you're seeing other areas of the market
With Elon Musk leading the charge.
Right, for sure. There's been some revolts, against that
Is
particular
that similar
company.
to the dot-com bust that was in the, late 90s?
Yes, so we look at that very closely as a very similar period. So anytime you have something that is being viewed as, a massive disruptor, to businesses, to, the world, internet was absolutely one of those in the late
Absolutely.
90s. It's coming
Yeah.
about, there's gonna be drastic change coming out of it. Leading up to, this Mag 7, it was AI, which, I don't think anyone can argue against the fact that that is going to cause massive change across many different industries. When we look at that analogy, usually the leaders at the beginning of this disruptive phase are not the leaders that end up winning at the long term. So, you can look at a lot of case studies from the late 90s, even if you were to look at or think about smartphones, right? So you have
Right.
Palm came in, and that was, oh my God, this is gonna change the world. It's got a stylus.
AOL,
And
Blackberries,
then 2 years later, BlackBerry.
Compact
2 years
computers,
later, right,
yeah.
Apple, 2 years later, Google. So, when people are rushing into NVIDIA was kind of the poster child over the last year and a half, they're making the chips that power AI, and people are rushing into it. But, if you really look using some hindsight, you realize that, they likely are not gonna be the winner in the long run. And so you had everyone rushing into NVIDIA, the valuation, because everyone's buying it, valuations go sky high. So the growth that's needed, NVIDIA might end up, and there's a lot of poster child from the late 90s where they were great companies for the next 20 years. The stock price failed to keep up with just the general S&P 500 because those valuations were so high that the expectations off of those valuations were absolutely unattainable. And, that's what we think about when we're thinking about some of these Mag 7 stocks. So, there are no stocks in this portfolio, obviously, but, our view on that is, yes,
That's why I said I went off,
you should play, you should have a piece of that exposure because we do, that is gonna change the world, but you just don't wanna be overweight them. So,
No.
But
I'm sorry.
I just want to add, because what you
Yeah.
were saying, you said just similar to the late 90s, one of the things we have for our
I've
equity
been around
clients.
long enough. I can
Yeah,
see
no, I
that.
know, we're all been
Right.
there. But it was funny because as Mike mentioned NVIDIA now, and you look at Cisco Systems then, and my mom would call me and say, why don't you just buy a Cisco system? It goes up 30%. And I'm like, Mom, don't watch CNBC anymore,
Yeah.
please, and it was one of those things where Mike said, it's got that same thing, and you could overlay the two on top of each other, and right now NVIDIA's right there at the peak of where Cisco was, 25 years ago, and then you saw it come down, and like I said, it remained a great company, it still sold a lot, it just can't keep up with those expectations, and like
Right.
NVIDIA would have to sell 5 times more than it's already selling to even keep its price at the same level, yeah. So,
it's massive when you look at what's needed to keep up with those types of
Yeah.
expectations. So, all in all, you know, we do think, you know, there's pieces of the US market that are gonna broaden out and play a larger part. International is picking up, so again, in response to what's happening stateside, you know, you have countries out there that are readjusting, rearming, you know, that's stimulating some of those economies. So we think that a lot of, and I wanted to say that this is our opinion, but I would say, you know, most of the research that we track will say you're gonna see a lot of volatility, you know, in the next couple of months. And once midterms are starting to come into view, you may see, you know, some more trade deals occurring. You may see pieces on tax that are coming in to benefit and give some comfort to investors. So who knows how long that's gonna last, but we do know for certain that the market does not like uncertainty, and we're in a period of drastic, unprecedented
Daily,
uncertainty.
interday,
Yeah.
things going on, yes.
And
I don't know if that
history has
helps.
a tendency to repeat itself as well.
It does, it does. May not repeat, but it rhymes.
Right, right.
That's, yeah, that's exactly how we look at it.
Yeah, you're saying a couple of months and the
Probably not.
volatility will
We think that the volatility is going to absolutely be there for a
A
handful of
while.
months. When that turning point comes, who
Yeah,
knows?
hard to say, yeah.
But, we do know, yeah, that there is some political interest, in this and confidence in the administration, you know, which will be interesting to see how this plays out. But we don't have a crystal ball,
Yeah.
unfortunately. I really wish we did, but that's how we're viewing things at the moment.
Thank you.
Sure.
Okay, any other questions? That's a great report,
Oh, great.
great results.
We are available at any point for any question, whether it relates directly to the portfolio or not, you know, we're more than happy to share our views and our opinions.
Greg, do you get involved with these folks?
Yeah.
Yeah, on a regular
Yeah,
basis,
so I
right?
mean, you know, part of the process is, you know, when things mature, right? Like, even if you look back at the end of the year, so we received a big closing from the Fair Life Project, I think probably the last week of December. Like, if you looked at our financial statements, the audits, you'll see our investments are 13.7, now they're 17, right? So like, basically, within that first week of January or somewhere around there, we called Mike and said, hey, we have some excess cash, because we just closed on that deal. That's when we turned over approximately $3.5 million. We bought. We didn't like wait another quarter. We didn't wait.
Right.
We contacted Mike and Steve and said, hey, we have some excess cash that we don't think we're gonna need over the next years times where our next one's gonna mature. So we forwarded over some cash to HPA, and they bought another, you know, I don't know what the last, where you
And
went out.
it was on the tail end of
Tail
the
end.
ladder,
Yeah.
and that was invested, to your point, Greg, within, you know, 2 days. So, you know, we want this money working as quickly as it possibly can
Do
be.
we see that as making adjustments
Yeah, that was
quarterly
Troy's issue.
or
It-
monthly?
It's really monthly, like, again, the two big variables that we have, right, so our fee income, which historically, over the first quarter is very low, right? Like, we get if I look
get a
at the
whole
last
bunch of
couple of years,
stuff
we
at the
get
end of the year, and then
75% of our fee income the last few years,
Right,
really within almost the last 2 months of the year.
Wow.
Right, like, that's just what it's been. You know, we've had these huge projects, right, and they generally take a little bit longer to close, and we close those the last, again, couple months of the year. So we don't wait every quarter and to be like, oh, what's our excess working capital look like?
Right.
Because we want to take any of that and get into the market sooner, right? And so that's kind of what we do. But again, there's that variable fee income. Like, if we don't have a lot of fee income, like, we may need $500,000. We can't roll over all of that. We may need some because workforce
keep that
development
cash flow.
expenditures may increase. So those are our two big variables, our fee income, right, what's coming in, and workforce development, what's going out, that we really focus on. We know 95% of the other variables, which is not a lot of variables, it's mostly our overhead, and we know what that runs us basically every month. Those are the two big things that we look at to say, okay, hey, what do we have to pay out over the next 2 months in terms of workforce development? and what does that fee income pipeline look at? Is anything closing? And that's kind of how we look at that.
Good, thanks for that update.
Yeah.
Any other questions? Great results.
Yes.
Keep it up.
Yes, and great onboarding, thank you.
Yeah, thank you guys very
Right.
much.
Thank
It's
you.
been very easy. Your team has been excellent to work with, so we really appreciate that.
We're up and running with everything in position, so we're happy with how quickly it
Good to
occurred.
hear.
Great,
So
appreciate the
thank you very
partnership.
much.
Yes, so do we,
And the
absolutely,
expertise.
thank you.
All right,
Thank you.
take care, gentlemen. We'll see you soon.
And just let us know on the quarterly meetings, you know, what month of what, you know, if it's the third month of each quarter, you know, we're happy to be here,
We'll
whatever
chat with
works.
staff and come up with a cadence that works for
That
everybody.
fits with the finance committee.
Yes.
Right?
Yeah.
which,
We're fully
goes
flexible,
to full-
so whatever you need and whenever
Okay,
you need it,
great.
we'll be here.
Thanks.
It's nice to be
Thank you.
down in the city too.
Take care.
Thank you, everyone.
Bye, guys.
Thank you, John. Thank you so much.
Is
Have a good day. Is the meeting over? I'm not gonna steal your water.
Oh.
That's how it happened right there.
That's
We have a
not
few more
right.
things.
Okay.
Okay, next item on our agenda is to review the fee schedule on page 9 of your packet. If there's anything, any points you want to make on that?
We're not recommending any changes, same fee schedule as in years past. Are there any questions about the existing fee schedule? We just had a good discussion of about fee revenue and kind of when the windfalls take place.
Wasn't that up around 400 instead of 350 at one point?
I have a feeling that staff has a lot to do with the end of the year fee income. They
There's a
push
lot of
really
pushing.
hard.
A lot of pushing.
Rachel. Yeah. We haven't, you're talking
No.
about our application fee?
Yes.
The application fee has remained the
Oh,
same
that's the
for
money
many
that
years.
comes.
Be careful, Rachel, you were blushing.
$350 when a company, when
Generating
an applicant
fees.
submits an application to COMIDA, we require a payment of $350. That's
That's
been
the
through.
application.
Right.
Yeah,
But then going forward, there are fees,
so there's an application fee,
right?
and then there's the administrative fee, which is based upon the project amount.
Exactly.
Yes.
Okay, and that is around,
It's 0.75% of the whole project amount, so it varies by project. Is that what
yeah,
you mean?
is that,
Yeah.
is there an average in there somewhere?
I don't know, we could get an average.
Depends on the project
Depends
size.
on the project size,
Yeah, you've got the huge,
yeah.
projects and then
Yeah,
lots of little
yeah.
ones.
I mean,
Okay.
we have a minimum fee of, well, actually, no, you only have a minimum fee on the small issuer. So we don't even have like a minimum fee for the IDA or anything like that, for the smaller projects. I will say, just anecdotally, and I know we've talked about this before, our fee is the lowest that I see across the state, and I wouldn't recommend changing that. I think that it's great that this agency can offer such a competitive fee, and I think it keeps us busy, it's small business friendly. Most agencies charge 1% of the project amount,
I see.
but you have to keep in mind our volume, we do a much greater volume, so we make it up, where the smaller agencies can't. So I think I'm not saying they're high, I think they're right where they should be too, but we seem to be in a good place.
And we have a smaller staff too, right?
Yeah, we have a
Operationally.
very small staff comparatively, so,
Right. Lean and mean.
yeah. That's the way we like
What
to
a
run.
nasty folk. Alright, so let's see, we need a motion to recommend that the full board adopt the fee schedule. Is there a motion? Moved by Rhett, seconded
Second.
by Lisa. Any comments, questions? All those in favor say aye.
Hi.
Opposed, motion carries. Next item on our agenda is to review the Finance Committee charter. Are there any changes that we would perhaps like to make?
No changes here either. This is the same charter as in years past.
Okay, is there a motion to approve the charter? Moved by Rhett, seconded by Lisa. Any changes? All those in favor say aye.
Aye.
Opposed, motion carries. Then we have an update on page, let's see if I can find it. 12,
That's what it's a good
on the,
one. The update to the employee handbook.
do I have that? Charter.
Is it not in your book?
And then I have retiree health insurance.
Yes, that's the change.
That's
That's
the
the proposed
change.
change to the employee handbook. And this is per our practice in, it mirrors, the county policy. And I'm gonna ask Allison to talk through the proposed change.
So we didn't have any kind of retirement policy. The county's policy is pretty much the same as this, so that's why we're actually implementing.
COMIDA didn't have a policy,
We did not have a
but the county
policy.
did?
The county did for healthcare after.
Does.
Yeah, county does, so.
Okay,
So it's a policy that allows for retirees to
still,
access
yeah, to
health
still
benefits.
access healthcare, yeah,
Okay.
where we continue to pay a portion of it.
Is it
It's
similar to the county or the
It's
same?
like pretty much exactly the same.
interesting.
Welcome to the
It's a good-
21st
Sounds like
century.
a good change.
Yeah.
So
And
moved.
so do we need a motion on that? Yes, we do. This is the update to the employee handbook, okay? So I need a motion to approve the new policy on the employee handbook. Moved by Lisa, seconded by Rhett. All those in favor say aye.
Aye.
Opposed, motion carries. Next item on our agenda is we're working our way through these, the policies and procedures, more particularly the investment and deposit policies. Any changes there that anyone recommends? I'll just ask first on the investment policy. And then we've got the deposit policy. We wanted to break those up.
Are we recommending changes here? I'm sorry. Okay, I didn't think so. So these are, again, remaining the same as in years past.
All right, I'll ask for a motion to recommend that the full board re-adopt the investment and deposit policy as presented.
So moved.
Moved by Rhett, seconded by Lisa. All those in favor say aye.
Aye.
Opposed, motion carries. And now we move on to,
This one too. 4.
I guess it's the self-evaluation that we're looking at. So those finance committee members who completed the survey and self-evaluation, looks like the great majority of the questions are given pretty high ratings.
Similar questions here as we discussed in the previous committee meeting about training and qualifications for committee members, which the qualifications is tricky because our bylaws do not call for any specific qualifications as far as I understand for board members. And we try to work collaboratively with the legislature and the county executive's office to, when there is a vacancy, to advocate to get the best possible candidates in these seats, and all of you are reflective of that. And then with training, we do offer training and onboarding when a board member is new to COMIDA, and I'm gonna work to get everyone's email addresses on the New York State Economic Development Council listserv. I think you can all benefit from reading and paying attention, monitoring the activities of that organization. And we'll keep you apprised of any Harris-related training as well, ABO-related training, if you're interested.
I can add, and this just happened this morning, so I haven't even had a chance to tell Anna yet. So when we meet on April 1st, that's the housing study
Yeah.
discussion, and the MRB group is gonna facilitate that, and they also created the cost benefit analysis tool we use. And once we get through the housing study, they're gonna then go in detail and explain the cost benefit program. So there's training.
So that'll be a good training to go
Are
through.
they virtual or are they
They're coming in person.
person?
Robin, Ann asked if we have April 1st on our calendars.
You should.
Yes.
Yeah, it's already on.
Yes,
What
okay.
is the date, or well,
April
April
Tuesday.
1st.
It's April
COMIDA
Fool's
board
Day.
meeting.
What's the time?
Tuesday, April 1st.
At 12, our
noon.
normal time, 12 o'clock.
It's there.
But it's April 1.
Yes.
It's like an additional meeting that we're adding.
Got it.
So there won't be any, we're not planning at this time any business, if you will, like a normal board meeting agenda. It's specifically to start the housing policy discussion
Okay,
and then this training portion.
and that's open to all members, board members.
Yes, I encourage everyone to attend, strongly encourage.
All right. Okay, any other items to come before the committee, the finance committee? If not, can we have a motion to adjourn? Thank you, Rhett.
Seconded, I'm sorry.
Thanks, Lisa. All those in favor say aye. Opposed, motion carries.